This conference will now be recorded.
Okay, good afternoon, everybody. It is Sunday, December 12th, 2021. This is Greg Morton. This is the weekend video update for Canslim Growth Stock Investors, brought to you by the Greenville Eastside IBD Meetup Group, as well as the Stockyard Meetup Group. As always, this is for educational purposes only. I'm not recommending any stocks or securities to buy or sell, and all investing has substantial risk of big losses. So we want to learn first and only then invest. So this afternoon, we'll look at the MFactor, market review, and market direction. I think we're sort of in no man's land in the middle of a game of tug of war, so we'll look at that and I'll talk about that. Current trading plan and checklist of constructive things you can be doing right now. Look at a couple charts, not a few, two, I think, related to relative strength. And then we'll look at the agenda for our big online monthly meeting, which will be Tuesday, December 14th, coming up in 2 days, and we'll have two timely educational topics in that. So first, the MFactor, which we all know is the most important letter in Canslim. Bill tells us to look at the action of leading stocks. That's a little bit difficult right now because if you just look at the 5 big leaders, they are holding up, but the other recent leaders, Upstart, Asana, you're just getting killed. Actions of stocks owned, talked about where we were after the follow through day and where we went after the prior follow through day, and then sort of where we are now. We'll look at that in the group teaching portfolio. We'll look at the market pulse, distribution day count, price and volume on the indexes. So let's get out of here. Exit this, and before we look at the indexes, let's do it backwards this week. Let's look at my coloring book first, which is my supplemental tool for tracking market direction. So we know recently everything flipped to red, 6 indexes on MMTS. We had distribution day count getting up there, 4 on the NASDAQ, 6 on the S&P 500, and 6 on the Dow. The power trend went to under pressure in the market school model. Exposure was level 2 or level 3. The window of opportunity closed back on December 30th, but then it opened back up on the 7th, which was Tuesday of this week. So that's sort of where we are. You know, the buying and selling day count, I only have 7 buying days, 11 selling days within this 21-day window. Predominantly red has been the more prevalent color lately in there, so that sort of leans toward more of a distribution dominant tape than an accumulation dominant tape, or as Mark Minervini says, a hard penny environment instead of an easy dollar environment. So we're just watching this. We've had some terrible days, which I kind of outlined in red, but then on Tuesday, we had this massive up day. NASDAQ was up 3.03%. Of course, Monday was actually the first day of an attempted rally. You see it's labeled here, rally day number 1 on all 3 indexes. That just means they were up. And we'll talk about the rally day, follow through day system in a lot more detail at our meeting on Tuesday. So that's where we are. Currently, sort of a lot of headline risk coming up this week. There's several days throughout the year that I always think are very hard to trade, and the market seems very volatile. And those days, in my mind, just my opinion, you know, are Tuesday before a Fed meeting. Everybody, it seems like it's sit and wait, not a lot of volume a lot of times. Then Wednesday, the Fed meeting wraps up. So sometimes you'll have volume will come in after the announcement and the press conference. So that'll come out at 2 p.m. Wednesday. We know they're going to start talking about tapering, and now they're talking about rate increases next year. So who knows what all that's going to show. And then this Friday, another very difficult, volatile day, we have quadruple witching, which only happens once per quarter. Have the S&P 500 quarterly rebalances at the close, and then the NASDAQ 100 has its annual reconstitution rebalance at the close. So those are just things to be aware of. I don't have any rules. Those don't overcome my buy or sell rules, except sometimes these are days where a really good setup and a really good breakout if I'm going to try anything on those days. So that's sort of where we are. The window of opportunity has opened back up. I like Steve Swetz's signal and system a little bit better than IBD's, which is still in correction. So for me, it's okay to start wading back in. We have the rally day in place, and we have the window of opportunity open back up. I'm going to be very cautious and go very slow, but if the proper setups are there, then and something I'm really interested in, then I may be willing to try that. And you can sort of see that if we flip over to the group teaching portfolio. So we have a little bit of exposure. TTD is the only one that did not completely stop out during the recent correction. So that one's been in there a little bit longer. Have some calls in Olaplex and a position trying again in Olaplex. We got stopped out before. And then Regeneron, just this week was breaking out, giving us an early alternative entry. So that's actually the only one that's at a full position. So we're only 28% invested on a cash basis, nowhere even considering using margin yet. Need some market strength, need some accumulation, need that follow through day to start going in more heavily, and need setups. Got to have Canslim stocks set up in full and proper basis. But if you'll go through the Growth 250 near pivot list this weekend, there were, hold on, let me look at my notes, 25 stocks on that list, and while a lot of them were not Canslim, traditional Canslim stocks, there are some in there. So, they're by definition, if they're near the pivot, they are in a base and are set up. So those within the Growth 250 is a place to kind of look and see what's out there on the horizon. And then finally, since I'm doing it backwards, we'll look at the index charts. So here's the NASDAQ. You can see went under pressure and then in correction on my little colored tape down here at the bottom. Here was Monday was our rally day, that up day. And then on Tuesday, that big day, the NASDAQ actually did a triple jump. It took back the 50, the 10, and the 21-day moving average line. So that was constructive, trying to hold above the 21 days. So that's constructive. Did not come down to the 10% off or correction territory. So we're just watching and looking for that follow through day. And then the S&P 500 amazingly hit an all-time closing high on Friday. So there's a few big caps that they're holding these indexes up and actually pushed it to an all-time closing high on volume that was not even above average, and looks like it was down a little bit from the prior day. So it was not super strong there. The NYSE, in a battle right there at the 21 and the 50 day. So we want to see it take those back over, get above those. Dow, I'm thinking it's back above the moving average line. So that's constructive and had 3 tight days trading right there. Volume sort of tapered off. RS line still trended down. And then where we see big divergence, Russell just looks like garbage. Tried to come back above the 200-day, can't do it. This is the correction line being 10% off, so it came down several closes under that. It is struggling to not go down over 10% from its high once again. RS line's plunging terribly, so this one looks really bad. S&P 600 is not quite as bad. Has the financials propping it up a little bit, but it's still under the 50 and the 21-day, and then the 10s headed down to cross over the 200. So we'll be watching it. It also came off 10%, so it came down and closed slightly in correction territory. So when we have that divergence among those 6 indexes, with the 2 small caps being bad, it's more rare to see the other indexes make good progress to the upside. It works a lot better like it was a month ago when all 4 of them were clearly moving in lockstep. I mean, they were all right back in here, had a nice tradable rally, and all the indexes were at least moving in lockstep, even if at a little bit different speeds. And then one other thing we can look at here, GI, make sure I have the right chart. Ticker GMIAB and MarketSmith. So here's the NASDAQ in the middle of the page, and then here's the advanced decline line. So we just continue to see, this downtrend more severe recently. So the decliners are leading the advancers. Matt Caruso's been talking about a new highs versus new low indicator. So we're going to look at that in more detail during our meeting Tuesday night. I don't have it in here, but I am going to cover it Tuesday night to also sort of help us on market direction. So that's where we are. Looked at the coloring book, looked at the group teaching portfolio, and looked at the indexes. So we'll go back to this. So in light of all this, so here's what I said last weekend. I said the market is trashed right now, and it was. We hadn't had a rally day yet. We were having some wicked distribution, heavy sell-offs, but now we do have a rally day this past Monday on all three of the big indexes. So we're waiting on a follow-through day. Tomorrow will be day 6 of the rally attempt. The best ones are often days 4 through 7, and I really think of them still being good on days 4 through 10. So that would run through the end of this week. But then you have all those volatile days coming up with 2 days involved with the Fed meeting, and Friday being quadruple witching day, which just comes once a quarter. So that's why I said, you know, kind of I see the market and see the growth stocks, a lot of which are weak. The weakness is being masked by the indexes holding up, the big indexes and the big stocks, sort of in no man's land between the trenches of a rally day and a follow-through day. So one's current trading plan on the buy side could be not buying until we get a follow-through day. There's some good Canslim traders on Twitter who are all cash, or maybe 10% in the market. To me, that's the same thing as being all cash. If you're 90%, 80% cash, and even the group teaching portfolio at over 70% cash, that's a pretty heavy cash position. So that's perfectly fine. Newer Canslim investors, this is perfectly fine. Experienced Canslim investors and those that, like me, who look at Steve Swetz's window of opportunity, can be okay to be waiting back in. Just depends on your level of experience, and you do need the setups and the stocks that you have some conviction in to be waiting back in. Gotta be very careful, have to be disciplined on the sell rules, and make sure that you follow those. So constructive things to do now. Weekend routine always stays the same. Focus right now on the relative strength line, not the relative strength rating, the relative strength line, to identify leading stocks right now, showing early strength among all the damage. So ones, if that RS line's holding up or even going to new highs, that's really strong. That line answers the question for you. What stocks are strong right now? What stocks are leading right now? Is that RS line on the MarketSmith charts. Do post analysis on the recent market action and any trades. Great time to take a trading course in December. Matt Caruso and Oliver Kell both have new courses out. You're paying some tuition. That's how it works. I think it's better to pay tuition for trading courses than to pay it to Mr. Market when we're in a bad market. So you can go back. MarketSmith has several classic webinars and other webinars. A lot of those are open access, so you do not have to be a MarketSmith subscriber to view everything on there. Get ready for 2022. I will add a segment Tuesday night on some potential New Year's resolutions for Canslim growth stock investors for next year. So we'll touch on that again. And then check out the rally day, follow through day system and re-entry rules. That's that waiting back in that I was talking about. Do some study on that. I've done prior meetings and I'm going to touch on it pretty heavily on Tuesday evening also. So a couple charts. We want to look at in MarketSmith. I really don't have much to add to what we looked at last weekend. So the couple that I mentioned, here's Regeneron. Let's go to the weekly. Let's even go to monthly for a minute. So on the monthly chart, we can see this one's coming back to an all-time high after a really long base. I like that. It really has done nothing since 2014 or 2015, except sort of build this new little higher base. On the weekly chart, we can see a base on base with the first base. Where'd pattern rack go? I don't think I turned it off. Oh, maybe I did turn it off by accident. Sorry. So you got this cup with handle that was 34% deep. That's pretty deep, only 4% deep handle, but then you have it tighten up into a 21% deep cup with handle with a 10% handle. I mean, 21% deep cup with a 10% deep handle. 3 weeks down, 3 weeks coming back up. It's just gotten volatile in the handle area, but it's trying to break out to all-time highs. RS line's up. If it came to a new high past this point here. Obviously, it's real far this high over here, so it's got some room to go. Every chart now is probably going to have some flaws. And then Olaplex, we also talked about, this is an IPO base. It was kind of funny on IBD Live this week. Eagle Eye Ken Shreve talked about two charts, and he gave both of them the evil eye. One of them was Regeneron, which I own, and the other one was Olaplex, which I also own. So it was kind of funny. But here's Olaplex. You know, it looks wide and loose. It looks really scary, but this is an IPO base, so the chart scaling is a little bit off. And if we drill down to the the 60-minute chart, actually is kind of has a Darvis box that you can see between 25 and 29 here. That, I mean, pattern rec may not pick it up as a flat base because it's breaking the highs and breaking the lows, but there's an art to reading the chart. And so this one may become a flat base. I need to see if it's 5 weeks long or not. So we have that one, and then one other one, might want to study, recent IPO. This is in the chip sector. It has been losing money, but it's supposed to be profitable next year. And it has a day 22 left side high right there. So it's forming an IPO base. In fact, I think Monday will be day 10. So if I'm correct, if I counted right, then on Monday, the IPO base will show up with the low right there and the high right there, as it'll have 10 days. So maybe it can finish out that IPO base. Looks pretty liquid, $206 million per day in MarketSmith. Still have to double check that because it's skewed, it's skewed in IPO basis until the 50-day line has showed up for a couple of days. Yeah, we don't have the 50-day line yet on that one. So that's a couple charts you can look at. Going back to our presentation. So monthly meeting. So we've last met Tuesday, November 16th. We talked about digging in deeper and building conviction. Last month, our next meeting will be December 14th, this Tuesday. You can sign up at the Stockyard Meetup site. I have finished the agenda. So here's most of it. We're going to look at the MFactor. We kind of just did it, but I also will bring in secondary indicators, and we'll see. We'll have 2 more trading days, so we'll see how those go. I'm going to give you some Canslim nuggets from IBD Live episodes recently. We're going to look at the new MarketSmith tools. They've added some useful things in there that you need to know about. So it's great that they keep rolling things out. I know a lot of people weren't real happy about the merger or IBD and MarketSmith being bought out, but so far, to me, same people running it, and they continue to roll out really, really nice features. So that's, to me, that's very encouraging. We'll look at 2 educational topics, rally day, follow through day system. We'll review that. I'll go over the basic concepts so you have it in your mind. How does the system work? What's the difference between a rally day and a follow through day? What does a rally day mean? What's a follow through day mean? What are early signs of failure? So we'll go through that. And also, whenever the market's in a correction or really bad, I actually do a watch list. I call it a follow through day watch list. So it can be a little bit looser than my other watch list. And so we may run through that, and I'll just show you what I stuck on there and why. And then second educational topic, we're getting ready to launch the longest earning seasons of the year. It's going to go 5.5 months from January, February, March is the annual reporting period, and then April through the middle of May. So we're going to go through the middle of May and have a long earnings season. So great time to review our rules on earnings seasons. How can you track the earnings reports coming up? And then what are some viable gap up setups if you're interested in that? And I'll try to get you some links to some webinars where they've talked about that also. In the middle of this, which will be somewhere back in the educational topics, we'll take a 5-minute break. We'll look at recent IPO Olapex, talk about that, maybe building a little conviction in it. I'll talk about some due diligence I've been doing. Look at current watch lists from this weekend, and then near the end of the meeting, a couple people have submitted me tickers. They can submit them again in advance in writing. Let me know, are you looking at it for sell rules? Or are you looking at it for initial entry? Or are you looking at it for an add-on buy point because you're already in it? So let's make sure we know why we're looking at particular charts. So that's it. Here's a list of prior meeting webinars. I record these. I try to do these in great detail so that people can go back and order these. Here's the 3 on writing your sell rules. If you don't have a written set of sell rules, if you walk through those, you're going to have it when you're done. There's probably 4 to 5 hours of teaching in there on doing that and the different points on the MarketSmith chart, moving your stops up, portfolio management, that sort of thing. Here's the rest of the list. If you're interested in ordering some prior webinar, just send me an email, say I'm interested in those. I'll send you the list, the ordering instructions. Prior meetings are $10 each, except for that big IPO one that's noted on there as being different. Can join the meetup sites, a lot of resources on the Greenville Eastside IBD meetup site, and then the Stockyard Meetup site is where you register for online meetings. You can follow me on Twitter. I mostly use that for Canslim relating trading matters or things I might think are funny because I enjoy humor. And then you can go where you are now, Stockyard YouTube page. Make sure you like and subscribe. That's where I put the weekend reviews, teaching on the group teaching portfolio, our full meeting for May of this year on the IA Canslim zone in there, so you can see what we cover at monthly meetings, and there's no need for you to order that one since it's out there for free. My video teaching on the 8-week hold rule, which is really 8-week hold exception, to try to clear up confusion on it. So that's it. I get back to work on getting things ready for Tuesday night. Hope you guys have a great weekend routine and hope to see a lot of you on Tuesday. That's it. See ya.